Good morning and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Monday, the 28th of February. Now, the developments in the Russia invasion of Ukraine continue to dominate markets. Lots of news flow over the weekend, threats of nuclear attacks from the Russians. The Western response to the situation has certainly been stepped up. The coordination of the action coming through the SWIFT banking system, that's a really important moment where Russian banks are being excluded from SWIFT, really does mean that there's a big sort of repricing that we're getting in asset prices today. The flight to safety that we've seen where the dollar has strengthened, gold has strengthened, indices are lower again. But it seems that at the moment that the opening gaps that we're seeing in these markets are starting to come back towards being filled, and the reaction to the filling of those gaps, whether that is seen as a closing of the gaps where markets then continue to improve, or whether that is just another opportunity to sell, remains to be seen. Now, there's no real economic data to worry markets today, but there is an interesting speech potentially coming this afternoon through President Lagarde of the ECB. So let's see how she responds to this conflict and the invasion in Ukraine. It'll be interesting possibly for euro positions, but certainly markets are still going to be dominated by the news flow of how the Western response is in the coming days. Now, the charts we're looking out for today, I've got euro dollar, which opened with a massive gap lower, but is starting to find support again. I'm also looking at the gold price, which spiked higher initially, again then retreating. And finally also looking at the S&P 500 futures, which once more a gap lower at the open, but is it a gap that's finding support and now starting to look as though it's going to be filled and potentially closed, which would be a positive move. So let's have a look. And onto the Infonox MT5 platform, starting off with the euro dollar, we can see that this candlestick opened almost bang on the support of 11.20 this morning and has rebounded, and is currently basically coming up towards the level of where it was on Thursday into the close. So that will be interesting to see how much this market can unwind this gap. Obviously, the market closed quite sharply higher on Friday, so it's got quite a lot still to unwind that gap fully and fill the gap. But you can see here on the 4-hour chart, there's that gap that ultimately is up at 1271 area. But rebounding off that support is important. We're still obviously in this negative phase, this bear phase of euro dollar, but trading around the bottom of the range and holding on to that support is interesting and important potentially. But you'd still be saying euro dollar has got to be a sell into strength. It's not really managing to break this trend lower and lower highs and lower lows. But again, holding on to that support is an interesting development there this morning. 4-hour chart, you'd still say that any real, really serious improvement would need to get above 55 on that 4-hour RSI, and at the moment, without that, you'd still be looking at probably selling into strength on the continuation of what it seems to be the geopolitical risk. Gold chart, interesting uptrend. It's been basically buzzing around for the last week and a half. Obviously, you had that spike higher last week as Russia invaded Ukraine, but since then it's been uncertain. Look at this again, another gap open here on this market closed back down at the 1888 on Friday, and it gapped higher at the open to 1916, but then has pulled back, and you can see on the 4-hour chart actually this is developing into a top pattern potentially. We've got this uptrend also in place at the moment, holding that uptrend, but again falling over. Look at this 4-hour RSI now underneath the 50 mark and falling over. So it's not holding as much of a strengthening momentum outlook as it did previously. So this is a market that is, if it does fall over below that 1877 mark, that completes a top pattern. And then you can start to think about, well, that's coming back towards the 1800s area. So this is a really interesting market to keep an eye on, I think, at the moment. And finally on S&P futures, well, we saw this big reaction higher on Friday. Market sharply gapped lower at the open today. Fell a bit more following on from that open, but it's now starting to find a basis of support. And this is all coming above what we've got as the higher reaction low at 4227. We can see a slightly better outlook actually developing on that 4-hour RSI. Clearly, we are still in this negative phase, and the geopolitical risk news flow is still massively driving the price. But at the moment, it's holding up and it's reacting quite well to the initial gap lower this morning. So the key resistance is obviously at that 4383 level, that Friday's low. If it market now moves above that, that would be a real rejection of this early move lower that we've seen today. And that would be a real sign that the market is starting to find support again. Obviously, RSI back above 50 would again play into that improving momentum outlook. But yeah, that's a really interesting development that we've got. Obviously, the big gap lower, but the reaction to that gap is at the moment supportive. Thanks for watching this video. I hope you found it informative for your positions. I'll be back on Wednesday where I'll be talking about a whole raft of tier 1 data points with potential for a little bit of a distraction from the geopolitical risk for major markets. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much, everyone.